Well, good morning, everybody, or good afternoon. Glad to be here today with all of you. My name is Luz Urrutia, and I am delighted to be here and particularly excited about this conversation with Ken Weber. He's the head of Ripple Impact and VP Social Impact and Sustainability.
Just to be part of this conversation, we try to be partner-led in everything we do, particularly on the impact side. And the more corporate technologists are speaking to those in the community who are serving end users in the community, the better and more impactful our work can be. In Ripple's DNA is this idea that financial services and savings and wealth building should be available to everybody. Chris Larson, one of our founders and now our executive chair, has founded three financial companies based on the idea that financial services need to be more equitable and more participatory for everyone. And so while Ripple does some very complex things inside the global banking system, much of what we're doing is pointed at ultimately making financial services and the products that you and I and many in the audience probably take for granted accessible and affordable for everyone. My role at Ripple is that I'm head of our corporate social impact and our sustainability programs. I've been at Ripple for almost 8 years. Most of my career has been in corporate social impact and the sort of marrying of capital and technological innovation and social and environmental outcomes. So Ripple has been a leader in our industry and beyond. I and my small team, as well as hundreds of our employees, are involved in not just their day-to-day jobs, but purpose-driven work. They're very excited, particularly for our US-based employees, about the partnership that we have with Action. And we're really looking forward to finding out together to what extent these new technologies and digital assets can be helpful to small businesses and small business leaders in the United States.
That's great. Well, so Ripple is one of the leading companies in the crypto economy today. And you have been in this space clearly for a very long time. How do you see crypto as a tool for financial inclusion, helping the 4 billion individuals that are unbanked and underbanked, and not being used just as a speculative asset for higher tier of users and those who are wealthy?
Yeah, this is a great question, and I'm happy and somewhat relieved to have hung around long enough to see a major shift happening here in the very early phases of crypto. We're, let's say, 15 years into this grand experiment. There were very few users. There were very few use cases. The assets themselves were, if not worthless, not all that useful in the real world. Everybody's heard about the infamous ordering pizza with Bitcoins story. Everybody has probably heard stories about the uses of crypto on the dark web for nefarious purposes. But, I would say about 5 years ago, we entered a second stage of broader adoption of a reduction in what we used to call FUD, fear, uncertainty, and doubt. More attention being paid by institutional, traditional finance, more attention being paid by policymakers and regulators, which we, of course, welcomed. And really importantly, more energy and more participation coming in from innovative startups who were coming in to sort of prove out the usefulness of these technologies and who could then commercialize them, build businesses around them. And so I would say more recently, in the last year or two, we're now in a period of broader adoption and mainstream acceptance of these technologies. And This is not a trickle down comment. This is more a comment that now that these technologies are more or less here to stay, now that they have some regulatory clarity around them, now that they have a broader base of users, not just speculators, not just wealthy people with very fast computers. This is now the time to be engaging with these technologies if you are an everyday investor or an everyday business leader.
Interesting. I like that FOD, fear, uncertainty, and doubt. I'm going to be using that. So you've talked a little bit about some of the misconceptions and the misunderstood aspects of crypto. But where do you see areas where the challenges might actually be real, especially when dealing with vulnerable groups of consumers and small business owners? And what have you all done, and what do you think the industry could do to help build some guardrails?
Sure. Well, to be clear, Ripple is not a business to business to consumer company. We are more of a business to business company, although many of the financial institutions and banks, whether they're traditional banks or online banks, depending on the markets that they're in, obviously, they are serving consumers. And so, we're very cognizant of the newness of these assets, and sometimes the lack of guardrails or rules, as you say. But we have long argued for what we call regulatory clarity in the United States and globally. Ripple has, from the start, been a company that has not been about overturning government issued money or overturning traditional financial service providers, but more about working with governments and regulators, and more about working with existing financial service providers to improve the efficiency, the security, the ROI of what they're doing. We're builders, not disruptors, and again, that is part of our DNA. I think in the early part of this 15 years that we talked about, Ripple was more the exception than the rule in terms of the early entrance into this industry. But I think there are a number of companies now, many leaders in the space, and many more coming in that understand the value of rules and regulations, that want that regulatory clarity. They want those guardrails. They understand that if businesses and consumers are not protected, then there's going to be less adoption, less participation with these technologies. Stable coins are a recent evolution in the world of crypto. They are a great example of a digital asset that has a lot of rules around it. They are typically dollar for dollar backed. If a one stable coin is issued to you, you know that there's a dollar behind that. There's enough participation and liquidity in the system so that no one's going to be left holding the bag on those. Many companies are including crypto assets, including stable coins, but also traditional crypto in their treasuries. That's a treasury use case. That may or may not be applicable to smaller businesses, but digital assets are now an asset like any other asset, and can be included happily with other assets in a business savings account or in a treasury for a company of a certain size. So we can get more into the Genius Act in the United States, for example, that has written into law more guardrails and more consumer and business protections. But we view those as welcome developments in the crypto space.
That's great. And since we are in Financial Inclusion Week and talking about financial inclusion, talk a little bit about what do you think are the biggest barriers to financial inclusion in the United States, and you know the work that we do, right? And
Yeah.
I'll share from my perspective, but certainly would like to hear from you, Ken, which of these barriers you think can be addressed through crypto. So for me, the biggest barriers to financial inclusion really are centered around structure, information, and trust. Structurally, our financial system, as you know, was built for people who already have assets and long credit histories. And that leaves out so many incredible individuals and entrepreneurs, especially women, immigrants, people of color, and those in rural communities who may not check all those boxes, but have grit, have vision, and work ethics to succeed, right? Then when it comes to information, too many underserved individuals, small business owners don't have access to clear, honest guidance or the right kind of financial education to navigate the system. And honestly, a lot of products are just not designed with their realities in mind. And then finally is the trust. We all know that many communities have been excluded or even harmed by financial institutions. So rebuilding that trust takes time. And, it means listening, showing up, and designing solutions jointly with the people that are ultimately going to use them. From your perspective, do you think these are barriers that can be addressed through crypto?
It's a great question. I wouldn't say that crypto is going to magically solve those problems. They are, as you know better than I do, structural and cultural. We could get into the profit motive, and the one of the main problems with financial services for the poor or for the traditionally underserved is that it is hard to monetize those services at the same market rates that are paid by wealthier and more included populations. So those problems are going to persist. I think the barriers to entry in terms of participation in crypto and these assets are much lower. The KYC that is required to open an account with a crypto exchange that provides access to those assets, whether it's crypto or stable coins, accessing those products through ETFs and safer, lower risk products or de-risk products offered by financial institutions. I think those barriers are going to be lower. There is a movement around crypto-backed lending, which has had some success outside of the United States in frontier markets where crypto is pooled and loans are made against those assets. I think there are certainly some bright spots, and there needs to continue to be an evolution by end users and members of the community and financial service providers that are more proximate to those communities. I remember on a day 5 or 6 years ago during Black History Month, hearing from Black crypto entrepreneurs in the United States, coming on with a lot of excitement, just talking about participating in crypto markets in the same way that everybody else was. And that use case was speculation. And I remember feeling both excited that, there was a growing awareness of these assets within minority communities, but also dismayed that, the only use case kind of being embraced was like, I can lose money by investing in these exotic assets too. I think it has moved beyond that. We have a partnership with Morgan State University and a number of HBCUs. Morgan State has a crypto trading lab, which started with that sort of investment, gamified sort of use case. But they now, have integrated crypto and stable coins and blockchain much more deeply into their curriculum around lots of different use cases, including lending, including remittances, and including some more complex models that involve crypto, but that touch, on other sectors like smallholder farmers, for example, insurance, for example. So, the education piece is important. I think it should be community led in terms of deciding how important is this, and what are the important learnings, and when should we adopt these technologies. I remember making a donation to Harlem Children's Zone a number of years ago, and there was a lot of excitement in the courtship and in the fundraising phase, and Ripple had a lot of ideas about crypto education and putting crypto in wallets of teachers and students. And by the time we arrived at sort of making the grant, we had settled on that there were some prerequisites to adoption of crypto, and they had to do with math and reading and understanding of the world of finance and banking, and that giving crypto a big hug would come later. First, we needed to cross some of the, check off some of the boxes of basic education, understanding about how these technologies work.
That's interesting. You just mentioned something that caused me, because we're all about looking at impact measurements, right, and outcomes and evaluations. And so, question for you is, what are the measurements or the evaluation methods that you have seen that are in place as this industry is evolving so rapidly? And I know you all are participating in a number of things and in the development of them. So can you talk a little bit about that?
Sure. Again, being partner led and working with organizations like Mercy Corps Ventures, for example, we try to be very focused on what is the problem we're trying to solve. What do we think the use of this asset and this use in this context is going to accomplish? And then how do we measure that? So, for example, we have funded a pilot program with Mercy Corps in Kenya that tests stable coins and satellite imaging for proactive or anticipatory drought aid to farmers. And that pilot includes cash transfers and the provision of different kinds of insurance. The first phase of that pilot showed that stablecoins cut costs by 75% and delivery time by 90%. That program is now in the third phase. Coinbase has recently kicked off a kind of a universal basic income program. And I don't have the details of that in front of me, but I think what they're doing is they're going to give participants in the pilot crypto wallets. They're going to make stable coins available to them. Those stable coins will generate some very competitive level of interest. Right now, there are crypto exchanges, stablecoin platforms that will offer 4 or 5 or even 6% interest annually. That's pretty competitive when you compare it to sort of business checking or even savings accounts. They're going to see how stablecoins function as a currency within those contexts. We do a lot of work with. We have partnerships with more than 60 universities worldwide. A number of them have centers for financial inclusion, and we work closely with them to study how these technologies can be interventions that are going to be helpful over the long term in contexts where there is a problem to solve, and we think it is solvable. Remittances is the big use case where the money is going faster and cheaper. More money is staying in the pocket of the sender and the receiver. The success rate is higher. The exposure to fees and exchange rates is lower. So that is probably the most promising use case. That is not necessarily a domestic use case, but obviously, if you are living in the United States and sending money to another country, that is something that is worth paying attention to. If you have suppliers and payables in other countries, these technologies can also introduce efficiencies and securities into your workflow as a small business.
That's great. You all have been in this space for, relatively speaking, a very, very long time. And so telling your story and telling your use cases and what you've learned, I think it's a great way to find collaboration in the industry and, help others sort of provide the education that's needed. Would you agree with that?
I would, and we're very encouraged recently by developments in our industry where companies that are having success and growing and finding traction and product market fit with what they're doing are kind of joining the field in terms of corporate social impact. So Circle is a leader in stable coins along with Tether and Ripple and others. They are, as far as we can tell, building their impact team as we speak. Coinbase, which has kind of dabbled in impact here and there, and with whom we've collaborated over the years, now seems to be leaning in with some of their efforts. We are seeing some exciting use cases in carbon markets. This is not, something that may affect everybody in this small, medium-sized enterprise sector in the United States, but there is a large market in carbon removal and natural capital assets, and we're seeing some really promising uses of blockchain and crypto to help those markets grow and to deepen trust and liquidity there, and hopefully ultimately to help accelerate the problem solving as it relates to the climate crisis.
Interesting. So what I'm hearing you say, you were also working on some other key initiatives, right, around climate. And I had heard something that you talked about, or a podcast that you did. Can you talk a little bit about that? Because I do think that that's good for this audience.
Sure. So the use case there is broadly described as tokenization or the tokenization of real world assets. There's a lot of activity in tokenization of financial assets of virtually every kind. The next phase of this will be to tokenize assets that are going to be financialized, like property, like carbon. So, the same technologies that are being used to tokenize financialized assets for trust and liquidity is going to be applied in carbon markets, where you have lots of projects and companies doing carbon removal, creating carbon credits, or removed tons of carbon. Those then have a value in the marketplace. They fit into the net zero plans of countries and of companies, and even of some individuals. That is a market where the price of a ton of carbon is highly variable. It's dependent on a lot of underlying information and visibility and transparency into the methodologies that have produced that ton of carbon. Those are economic units that have value and they're tradable. And that market is projected to be $1 trillion market by 2035 or 2040, depending on whose forecasts you believe. And so in an industry that has been plagued by low transparency and low quality and some projects that have not delivered what they've promised, we see blockchain as a great way to kind of introduce a source of truth and of trust, and for there to be more capital flowing into those markets to take advantage of those products. The more trust there is, and the more liquidity is, the more high quality carbon removal will be happening, and the more net zero plans will be being fulfilled. And so we have, Ripple is part of having started one company called Centigrade, which is building sort of a data platform that will serve as infrastructure for that market. That's a collaboration with the Rocky Mountain Institute, a nonprofit that is very focused on decarbonization of the world and of the global economy. So not just financial services, there are other beneficial uses of these technologies that are really promising.
That's great. Well, you definitely are doing a whole lot. So congratulations and thank you. There's a lot to learn for all of us, and certainly, for those on the call, clearly the aspect of financial inclusion and how can we help underserved communities that generally don't get access to the first, financial services that are out there, but ultimately, in many cases, get left behind. How can they be sort of, if not at the front of the line, certainly almost up there to be able to benefit. So I'm going to do a quick fire close, and I'll answer the same questions and see how we compare our answers. So crypto will succeed in advancing financial inclusion if, finish the sentence for us.
Well, for me, it's what I said earlier. Is there a problem you think it can solve, and is that problem solvable? Is the intervention and the impacts and the outcomes observable? I also, would return to this idea of, community led, and I see there's a question in the chat. What does that look like? Obviously, that's individual learning and education. And that journey, I think, is the same for just about everybody. Where, for $25 or $50, you can open an account on a reputable crypto exchange and start participating in that market a little bit. It is not nearly as exotic or as mysterious as it once was. Those platforms operate the same way any banking platform, any checking account, any savings account, or any Venmo, PayPal, it's all the same kind of user interfaces now. Thinking about community-based lending institutions, community-based banking institutions, paying attention to the financial service providers that are starting to introduce these assets into their offerings, whether you can choose to have them in your holdings, or whether there are products being extended to you that somehow have crypto or stable coins involved here. Stable coins are proving themselves very quickly as a means of storing value and holding value and generating a little bit of interest, but also increasingly they're going to be used for payments. Now it's mostly cross-border payments, but increasingly it is, stable coins are likely to be used in sort of mainstream everyday payments.
That's great. Well, I'll answer the question about crypto will succeed in advancing financial inclusion from my perspective. I think if it becomes affordable, easy, and safe for unbanked and underbanked individuals and small businesses to access, transfer, and save money without relying on predatory intermediaries. That's my answer. So
those are great principles. By the way, when we think about financial inclusion globally, we sort of see it as fully banked, close to 2 billion. And then, as you mentioned, 4 billion that are either underbanked or unbanked or close to unbanked. I'm persuaded that those terms are not necessarily, accurate or appropriate. But, for us, from a financial inclusion standpoint, we are probably focused on that middle 2 billion, where there is money, there are earnings, there is a readiness or a need to take advantage of interest rates, checking, savings, small loans at fair rates. The crypto is not going to solve the problems for the least banked. The problem there is often lack of money, but there are also, there's a lack of access to technology. There are many more needs, many more basic financial needs that need to be met before you're engaging with or expecting these technologies to kind of solve any problems for that cohort. I think that will change over time, particularly where there are services where the blockchain or the crypto or the stable coins are behind the scenes and they're not necessarily viewable or important to the end user. But I think even as we get deeper into this phase of broad adoption, mainstream adoption, it's probably that middle cohort of small businesses, of working people, of migratory workers, of people who are maybe in a conflict zone or moving from one place to another, and need money to be cheap and accessible and cross-border and sort of independent of nation issued fiat money. All those things are that's very fertile ground for, I think, these technologies to have a positive social impact in the world.
That's great. So one last quick fire close question. What is one thing you tell an average nonprofit small business customer that's curious about crypto?
Well, for nonprofits, the first piece of advice is understand it well enough to accept it from your donors. There is crypto wealth. There is, a lot of enthusiasm amongst everyday Americans to own crypto and to participate in crypto. It is the largest market. You should have your board should have a meeting about the fiduciary policy, and it should be expanded not just to accept cash and gifts of stock and cars or whatever else is acceptable, but you should be able to accept crypto, and you should have a wallet, and that's that is the first thing that will be accretive to your organization in terms of participating in this market, which has a lot of momentum and probably will continue to have a lot of momentum for years to come.
That's great. Well, Ken, we're almost out of time here, so I want to ask you, is there anything else that you'd like to share with the audience as your final thoughts?
I think we've covered a lot of ground. I am not. I hope I don't sound like an evangelist for these technologies. I've had a very sort of deliberate and incremental approach to introducing them into social and environmental contexts. But it is accurate to say that there is now broad and diverse participation in these technologies, these assets. They are much less exotic and much less risky than they once were. There is participation from the business world. There is oversight increasingly by governments and consumer protection agencies. And that doesn't mean you have to go in the deep end of the pool, but I think some of the myths and some of the stigmas that have followed these technologies around for many of the past 15 years are now falling away.
Excellent. Great. Well, Ken, thank you so much for your time, your wisdom, your knowledge, and thank you to Ripple for having financial inclusion really an integral part of the culture, and trying to do things to help those that are interested in being participant in this growing industry. And you're not just do it singularly, you're also expanding into other centers of influence to educate, to collaborate. So thank you. And I hope the group that's listening online will join me in thanking Ken for his expertise and his wisdom. And you all have a great rest of this week. Talk to you all soon.
Thank you, Luz.
Thank you, Ken. Thank you all. Bye-bye.